Google and Viacom settled a landmark lawsuit, and that is where we begin tonight's Market Focus. The two companies reached an agreement on a 7-year-old case in which Viacom sued Google's YouTube unit for uploading content from its programs without permission. The terms of this agreement were not disclosed. Shares of Viacom up slightly to $88.41. Google rose more than 1.5% to $1,211.26. Shares of DSW lower on weak sales and a disappointing forecast. The discount shoe retailer saw fourth quarter profit increase, but revenue missed the street's estimates. Its new year forecast also came in short of expectations. The company did boost its quarterly dividend, though. Still, shares fell nearly 3% to $38.90.
Amazon rose on reports that it'll release a video streaming device in early April. Reportedly, the gadget will be available on Amazon.com and also at retailers like Best Buy and Staples. The stock was up about 1% to $378.77. Hertz is planning to spin off its equipment rental business. The company will receive $2.5 billion from the transaction, and it plans to use about half of that money for a new stock buyback program. Now, separately, Hertz posted quarterly earnings that came in below estimates and issued guidance that also fell short of analysts' forecasts. The stock slipped a fraction to $27.08. And General Electric's credit card business is the subject of 2 federal investigations. Regulators are looking into possible violations of consumer finance laws, according to a regulatory filing related to the unit's planned initial public offering. The new company, now named Synchrony Financial, is in talks with the Consumer Financial Protection Bureau. GE shares rose almost 1% to $25.65.
New York's Attorney General is cracking down on high-frequency trading, a strategy which uses superfast computers to gain an edge over others. Eric Schneiderman, who has already made clear his intention to police speed traders, is now expanding his investigation and calling for tougher regulations. It's something he calls insider trading 2.0. Eamon Javers is following the story for us from Washington and joins us now with the details. Eamon, what's he trying to do and why?
Hi, Tyler. Well, he says he's going to launch a longer-term investigation. This is something he's been looking into now for over a year, and that term insider trading 2.0 is the way he's branding much of what's going on in the high-frequency trading world. Very tough comments today from Eric Schneiderman. Take a listen.
Building tremendously lucrative advantages into markets for high-frequency traders at the expense of the investing public is wrong. It's time that we focus on structural reforms and restoring the mindset of winning based on price, winning based on smarts, rather than winning based on speed.
And Tyler, he said today that one of the ideas he's looking at is something called batch trading. Right now in financial markets, you have continuous trading in real time in high-speed versions. What he's talking about is something like a 1/2 or 1 second delay where trades get processed in batches. That, he said, would take out the telecommunications arms race component of all this and make it more fair for average mom-and-pop investors, Tyler.
Did Schneiderman single out any high-frequency firms by name?
He didn't, but he did reference Virtu Financial. That's the high-frequency trading firm that filed for an IPO last week. They said in a filing last week that he cited today without naming the company that they have gone just about 4 years with only 1 down trading day in that entire time. Schneiderman said that's suspicious and he doesn't like it.
You know, Eamon, every time this topic comes up, the industry people, the high-frequency traders say, look, you just got to adapt to new technology. You can't run away from it. But this go-around, how does the industry defend itself?
Well, that's pretty much exactly what they're saying. They're saying that high-frequency trading is actually democratization of technology and of the financial markets. They say they're helping to bring liquidity and price discovery to markets. They say high-frequency trading, in essence, is a good thing, guys.
All right, Eamon, thanks so much.